Investments. Mr. Vijayakumar, thank you so much. Afternoon, and thank you so much for taking your time out and joining us here on ET Now. The first question will be with respect to market and what you're making at this point in time. Would you recommend waiting for the earnings season to pan out to perhaps get a better sense of what the earnings trajectory is likely to look like for the next few quarters? And what do you make of the recent corporate announcements and the operational updates that have come in over the last few days?
Thank you for having me on the show. Well, we were a little bit cautious about the market at the beginning of this year, but after the budget, we turned very positive. And now after the GST reforms, and particularly after the 100 basis point rate cut by the MPC, we are very bullish. It will not be a very rational thing to wait in this market because it is likely that India will start outperforming other markets because we have been underperforming other markets by a huge margin this year. For instance, if you take a year till date, Nifty is up by only 5.6%, whereas MSCI World Index is up 17%. And MSCI Emerging Market Index is up by 27%. So this is huge underperformance by India, but this is a short period underperformance driven by fundamental factors. During 2020 to 2024, we had a 24% CAGR in earnings, but last year the earnings growth dipped to just 5%. And therefore the valuations got elevated. You cannot have a 22 PE for a market that is delivering only 5% earnings growth. But the scenario is changing now. This year we see the earnings growth at around 8 to 10% because profit growth in banking will be a little bit muted compared to the previous year's performances. And IT, we know, are facing big headwinds from revenue growth as well as profit growth. But consumption will be driving growth, particularly next year. FY27, we expect earnings growth of around 15%, sometimes can be north of 15%. And the market will start discounting that now. And therefore, it will be prudent to buy on dips now or buy even at this level now rather than wait for big dips because the dips may not come. A very important trend, particularly in the last couple of days. Yesterday, for instance, the FII selling has drastically come down and the DII buying is completely eclipsing the FII selling, and the valuation differentials between India and other markets have come down because of the sharp appreciation in other markets. Therefore, I will not be surprised if FIIs turn buyers in the next few weeks.
Okay, so sounding very optimistic on that front. And Mr. Vijayakumar, just on that note, you did speak about the DI FII flows. Just wanted to highlight for our viewers that we had a DI inflow of more than 5,000 crore yesterday, and FIIs too have started pruning the amount that they're selling. So that is also looking rather optimistic. But Mr. Vijayakumar, amid a market like this, where you still believe that our valuations are slightly higher, give us a sense of how the portfolio is positioned right now. What are your current overweights and underweights in a market like this?
Well, if you look at the market in its totality, even now we can argue that the valuations are slightly higher than the long-term average. If you take the last 10-year average, our PE ratio would be around 18.5, but now the market is trading at about 21 times estimated FY27 earnings, that is. Therefore, FY26 earnings. Therefore, the valuation comfort is not there from a totality perspective. But then there are segments of the market, like financials, for instance, leading banks, and also the PSU banks, which are attractively valued. The leading names in the private sector banks are attractively valued. Their valuations are lower than their long-term averages because FIIs have been selling them. Banks are the major segment of the portfolio of foreign portfolio investors. So when they sell, and they sold $23 billion worth of stocks this year. So when they are on a selling spree like that, they will be selling the large part of their portfolio, and that have depressed the valuations in this segment. And therefore, when FIIs come back to India, they will be buying precisely the stocks which they have been selling in the past several months. Therefore, that segment looks good. And also from the valuation perspective, if you have a longer time horizon, the consumption theme looks very bright because automobiles, if you go by the reports of automobile companies, their concern now is that there are logistics issues. They are not getting trucks. They are not getting railway wagons for delivering their automobiles to the dealers. The problem is logistics. The demand is unprecedented, perhaps the best in the last 20-25 years. And it is quite possible that in the present context of a low interest rate regime, this demand buoyancy in automobiles and electronic goods, white goods particularly, can sustain over a longer period of time.
Understood. And that's as far as the secondary market action is concerned. But Mr. Vijayakumar also wanted your thoughts on the primary market then. LG IPO opened for subscription today. We have Tata Capital's 15,500 crore IPO. What do you make of the IPO frenzy? Are you looking at any of these?
Well, normally there is a positive correlation between the secondary market and the primary market. When the secondary market, the stock market does well, the primary market also booms. But we had a totally different setup during the last 1 year. If you take the last 1 year, the Nifty return is in the negative territory. I think in September 2024, Nifty was 26,277. So it is negative from a 1 year perspective, but the IPO market has been booming. One reason is there is huge institutional investment in the IPO segment because the IPOs are coming at, not all of them, but most of them are coming at fair valuations, reasonable valuations, and some of them even at attractive valuations compared to the elevated valuations in the secondary market. So this is one of the reasons why the primary market is doing well, and the retail investors are very euphoric in investing in the primary market because the listing gains have been substantial. And of course, regarding the current issue that has opened today, LG Electronics, we are positive on that because that is one company which has been steadily growing and they have got decent market share in all these segments of white goods. Tata Capital, of course, the pedigree of Tata is there, but the issue is very high. Listing gains will be very, very moderate. But for long-term investors who have a 3-year time horizon, it makes sense to apply and remain invested.
Okay, so that's a take on the IPOs as well. Mr. Vijayakumar, thank you so much for your time today. Appreciate you chatting with us this afternoon.
Thank you.
Thanks so much. Okay, viewers, on that note, we'll slip into a very short break and be right back on the other side.